Nominal yields in the Czech Republic are still in negative territory for a large part of the yield curve. Speculative inflow and limited bond supply support the bond market, while recent ECB dovishness also helped Czech bonds to stay strong. Welcome to Research Insights. How great is the risk of negative rates by the National Bank?
The Czech National Bank were discussing the negative rates on the last meeting. However, the probability is pretty low because they understand correctly that negative rates will not help to economy. First, they know that they do not need negative rates to decrease the speculative inflow of Czech koruna from the foreign markets, because the market rates were negative during the September when the inflow was pretty high, in spite of the fact that the Czech National Bank rates was still close to zero. So from this point of view, they do not need it. And second, they were discussing the effect of negative rates on the loan growth, because they may think that negative rates would improve loan growth, and this improvement in loan growth will support the economy and inflation at the end. However, at the same time, they see that there is some acceleration in the loan growth, and Czech National Bank has already said that they are thinking about the hike in counter-cyclical buffer because this loan growth is accelerating. So negative rates doesn't make sense at the time.
When could inflation pick up to the level at which the central bank sees it is time to abandon the currency floor?
We expect that Czech National Bank will wait until the inflation to move above the inflation target. So do not expect that the exit to come before or with the inflation below 2%. For this reason, we expect that the exit from this FX regime would come in the 2017 at the earliest, and for this reason we also expect that some speculative inflow may decrease, or even there may be some outflow from these speculations.
Can Czech spreads versus German bonds go strongly into negative territory?
Yes, we expect that there will still be some pressures on the rates until the end of this year. The reason is connected to, let's say, speculative inflow and Czech central bank intervention, which means that there is a pretty high demand for Czech denominated assets and Czech government bonds, of course. And second, there will be introduction of a resolution fund, which will mean additional demand for Czech government bonds. This is the demand side. On the supply side, the Czech Minister of Finance tried to squeeze a little bit the market as they cut some issuance plan for this quarter. Nevertheless, we expect some improvement in the spreads at the beginning of the next year, as Ministry of Finance usually issue more in the first half of the year compared to the second half of this year. And at the same time, we expect that Czech National Bank will move the expected exit from the second half of the next year to 2017.
Thank you very much for sharing your view.
Goodbye.
Thank you very much for watching CE Insights.